How's it, guys? Welcome back to FX Rhapsody. Today's video is going to be all about following your trading strategy and having that when you create a trading edge and then having that trading plan in place and just following those rules. Basically, we talked about it in our previous video about having the correct mindset in trading. It's just sticking to the plan, waiting for the opportunity, and how things just plays out, and not just always jump into a trade anytime or every time of the day. So what we have here is we're going to be looking at the 4-hour time frame. The reason for that is I feel like the people or the traders that do trade on the 4-hour time frame, they have that what's the word I'm looking for? Patience. There we go. They have a little bit more patience when it comes to jumping into trades, waiting for that perfect setup. It's not like the 1 minute or hourly or 15-minute time frame guys. That it kind of like you're always in front of the chart. So 4-hour time frame is a nice one to start with, just to slow things down a little bit because of the candles moving a little bit, so you're a lot slower than obviously the lower time frames. So what we have is the EURUSD, and then what we see is price going down. Now it's a simple little strategy, nothing to it. It's basically just what we want to see is the momentum in the market shifts, from a downwards movement and then going into a bullish movement, and then catching that little breakout, and then a nice little trade maybe towards the upside. Okay, so what we have is we have market going down, as we can see. Okay, market is moving downwards in a bearish movement. Now somewhere along the line, and it's with every single market, there's going to be ups, there's going to be a down, and then somewhere the market is going to start shifting again up. Okay, so what we have is we can see there's a little bit of bounce in the market. Okay, so we start highlighting these areas in the market. This is a little simple, just structure in the market. As we can see, price going down, forming that consolidation. I'm just going to zoom in a little bit so you can see a little bit better. And then price not hitting past that area. So what you do is you highlight that area in the market. You can see price going down, then bouncing up again. Okay, and then usually when that happens is you see another bounce in the market. Then you start highlighting the bottom area, because obviously you have some kind of a range going on, a consolidation in the market. And this is usually a sign of where market just kind of, it's losing momentum, it wants to turn. Okay, so what we have is, I'm just going to do that just to make it a little bit more clearer. So you can see price bouncing off these areas, going up again, down again. And now all you do is you sit and wait. You extend these areas in the market, nothing to it. Oops, that's not what I wanted to do. There we go. So you extend these areas in the market, and now you wait. So what we have here is a little bit of a break in the market. As you can see, price breaking above it. You do not react to it right away. That's not what's going to happen. So a lot of guys, what they do is they see this area being broken in the market. So a lot of retail traders, the price breaks, comes back, retests that area. But for me, that's not a good sign of a momentum carrying on. So a lot of guys will start buying because price is now broken the resistance, it's supported this area, and now obviously it's going to carry on. Okay, so this is the area most retail traders will buy. Okay, but we wait. Okay, because as you can see, the next couple of candles, look there's a big downwards movement. There's a big sharp dip in the market. Why is that? We can see this was the area over here. Because there's some, resistance over here, price creates liquidity in the market. You all can see that. So what price does is it creates liquidity, price goes up, and it taps out that liquidity. But before price can move on, it needs more liquidity in the market. And where's the other liquidity lying? It's lying right down here. Okay, it's just below this area of where price, below the support area in the market, where there's a lot of sell orders lying. So price just goes up, takes out that liquidity, it moves down, hits that liquidity, and from there on, what does it do? It starts going up again. So now this is the area that we focus on. So we have got, obviously, all these guys that bought here, they've been taken out. And then price went down and took out some liquidity over here. So now we wait for another break in structure. Now the break in structure is going to obviously be this area here. Okay. So I'm going to do that. Just going to make it a different color so we don't get confused, because I like my liquidity lines being blue. So now we wait for price to just break that structure. Okay. And then, because now obviously guys, you can do this on any time frame. Okay. Any time frame this scenario happens. Okay. As you can see how price breaks that area, zooming in again, it breaks that area, retests it, and now we see price start moving up. So where do we enter? Where is the correct time, or when is the correct time to enter? Now. This is the time we get, alerted. So, okay, cool. Now I'm waiting to see what price does. Because what I want to do is, I'm using a simple tool. Okay. Fibonacci is a great tool to use to enter, to have good entries in the market. Okay. So now what we see is we see a break of that structure, price going up, price going down. What we do is we wait and we see. We want price to go up, come back to retrace, and then move up again. So what we want to see is another retracement in the market. So we wait and we see. I'm just going to highlight this little area. We check out all these little highs in the market. Okay, just going to make this a little bit thinner. You don't want too many lines on your chart. Okay, you can see price dipping again. Now, this is the area. Look at this. What you do is Fibonacci up. Okay, taking this out, you have a swing low, swing high, retracement back to the Fibonacci 62, and that's your entry. Okay, that's your entry that you've been waiting for. And then with that entry, now we can start buying upwards. Okay, so I'm just zooming out a little bit just to make it clear. So you have a consolidation in the market, you have a price hunt liquidity at the bottom, and a break. Look, this price hunting and the liquidity, this is not always going to happen. That's the reason I'm not buying over here already. I'm waiting for a nice retracement down and then up, and then buying. Up, down, retrace 62. Now I'm buying up. Okay. So that's basically what I'm waiting for. So now obviously this is going to be your next high. So if you missed your entry over here, now you wait for another retracement in the market. Okay. So what price does is it creates another higher high. It comes down. Okay. So now it creates another higher high, because we can see shift in the market. Higher high, higher low. And this is another high, but a low, higher high. So I'm taking this Fibonacci out. I have got my entry over here. You take your Fibonacci. If you miss this entry, you take your Fibonacci to this high, to this low, that high. What you do is you highlight this area in the market. This is the area that you want price to return to, because we can see the shift in the market. Price is moving upwards. Okay, we're looking for any buy opportunities in a uptrend. So now we wait. We wait until price gets to that area. Okay, don't buy yet. There. Okay, that's the area that you buy. You place your buy over here. Okay, right about there. And now we wait again. That should have been an arrow, sorry. But I mean, that's what price does. And that is basically how it's continuing upwards. So opportunities in the market, guys. Simple little opportunities. I'm going to give you one quick little example again. Or another example, basically, of opportunity that you could have had in the market. Okay, guys, so we're looking at the next little example that I'm going to give is the British pound Australian dollar. I never do analysis on this pair, but I mean, you follow this on any other currency pair, industry, whatever you're trading. Look at these opportunities in the market. Okay, so what we have a big price going downwards. Okay, once again, it's just we're waiting for something to happen. Price coming up again, forming a high, going low. It's a lower high. Now we're waiting for a lower low to form. Okay, there's the lower low. It's lower than the previous low. Then price going up again. Okay, not forming that. There we go. The price turns. So price is not forming another lower high. So now we look at this. It's like, okay, cool. What's going to happen? Price again not forming another lower low. So this is now consolidation time. Okay, price consolidating, and what you do is you do that because now this is the area in the market which raises almost wanted to concern, but it needs to alert yourself to say, okay, somewhere price is going to start turning. Okay, we have a nice little break in the market. No, price not hitting past that area. Price just consolidating, having up, price going up, not breaking that area, just in between that area. Okay, we can see, yes, price just moving a bit above it. Is it liquidity that's been taken out? We wait and see what happens. Okay, that's just sitting on your hands and waiting the whole time. But the area I'm focused on is this area. I want this area to be broken because that's a nice little high area in the market. Okay, if price, not here, sorry, that's not the consolidation, but over here, that's obviously your previous high that was created. So if price goes past that area, then it means structure's been broken. Okay, that's the area that we need price to go past, because if it goes past that, creates a lower low, a lower high, then we know price is just moving, upwards. Price have turned in the market. The market has gone from a bearish to a bullish market. Okay, what happens there? Boom, price turns. There's no liquidity hunt at the top and at the bottom like the previous example. It's not, like I said to you, it's not always the case. But you look at these highs and lows. It's just a break of structure. It's just from moving from a downwards or a bearish movement to an upwards movement, downtrend to an uptrend. That's all we're looking at. Okay, that's all. So we see that price, the break in structure, again, price coming down, like we saw in the previous example, not breaking past it. Yes, there's, price going past it, but not closing beyond that point. And again, just waiting for that consolidation. Now we sit and wait. Okay, we want a retracement in the market. We want an entry in the market. This is not an entry, guys. So swing low, swing high. There's no retracement to the 62. Okay, price is not going back there. Price made a big movement upwards, but again, this is just a simple strategy. There's obviously more to, to make your strategy a little bit better and getting better. But this is just simple view to how things happen. Okay, this is a simple example for those of you who don't want to get too complicated. So now what we wait is we see another low. Okay, I'm holding here. Let's just wait. I'm waiting for that swing low, which is here, and a swing high. Is this your swing high? Whoops. Just want to move my thing. So we have a swing low over here. We have a swing high over here. Okay. So let's wait and see. It's just patience. All you do is you draw your area that you want price to come back to. Okay, there. So as we can see, just move on. You placed your buy order because price hit your zone between the 62 and the 79%. Price coming back again, going deeper into that area. Sorry, I'm just taking my mouse cursor out. Now you wait. Okay, there's a lot of times that you bought right there. Now price is going into a negative and you think, oh no, this price is just going to go against me. This is, I'm down and out again. You just have patience in your strategy, guys, because look what happens. Okay, there she goes. That's all you do. You just wait. Okay, that is another simple example. I'm not going to carry on. I can carry on all day. But I mean, two simple examples of price just going from in both scenarios, obviously, going from a downtrend, consolidating, breaking structure, and then going from a downtrend to an uptrend, using your Fibonacci just to get that perfect entry. I showed you this on the 4-hour. Go try it out on different time frames, even the 1 minute. You will be surprised as how things change and how things work in this market. Guys, I hope you enjoyed this video. If you did, don't forget to hit that like button, hit the subscribe button, notification bell. Show me some love by hitting that super thanks. And I will be seeing you in the next video. Guys, I hope you have a wonderful, wonderful trading day. Stay safe and happy trading, guys.